Hi, my name is Joel Hooper, and today I'm going to be going over a little bit about the cost of capital of AT&T. So let's get this thing going. Our first question asks us to identify how much interest-bearing short-term debt AT&T had at the end of 2017, and what was the average cost of this debt. Well, using the 2017 annual report of notes to consolidated financial statements, we were able to find that short-term debt, which was basically maturity within 1 year, was $38,372 million, while the weighted average cost of this debt was 4.2%. Our second question asks us, what was AT&T's actual capital structure at the end of 17? And also, what portion of AT&T's capital structure did short-term debt, long-term debt, and stockholders' equity represent in 2017? From our previous question, we saw that short-term debt consisted of $32,372 million. Long-term debt hovered around $125,972 million, and stockholders' equity equated to $142,007 million. To put these numbers into perspective, short-term debt came out to 8.64%, while long-term debt sat around 28.37%, and stockholders' equity made up 31.98%. Another large portion was made up of deferred credits and other non-current liabilities, and long-term debt to equity is listed at 0.89, which validates these numbers that I've given you. Our third question asks us to recalculate AT&T's capital structure just using long-term capital. So using the previous question's numbers of long-term debt equaling to $125,972 million and stockholders' equity amounting to $142,007 million, we are then able to follow this formula of long-term debt to total long-term cap ratio, and we get 0.47008, also known as 47.01%. Follow the same exact formula for stockholders' equity to long-term capital ratio, and we land at 0.52991, which is also known as 52.99%. Our fourth question asks us to assume that AT&T wants to issue a 10-year fixed-rate bond 1.5% above the equivalent maturity Treasury security. So what would their before-tax cost of this long-term debt be? Well, in order to find this, we need to find the U.S. 10-year Treasury bond yield, which came in at 2.63%, generating a 4.13% before-tax cost of debt. Our fifth question asks us to review AT&T's 2017 Notes of Consolidated Financial Statements and look at their income section. Using AT&T's federal income tax rate of 35%, we were able to calculate the after-tax cost of short-term debt using the following formula. The 0.042 or 4.2% of the cost of short-term debt, and you multiply that 1 minus the tax rate from good old Uncle Sam, and you get 2.73%. If you follow that same exact formula for the after-tax cost of long-term debt, using the 4.13% that we found for the long-term debt cost, and you multiply that 1 minus that tax rate, you get 2.68%. Our sixth and final question asks us to apply the capital asset pricing model in order to estimate the cost of equity for AT&T. Using a 7% market risk premium, a beta of 0.81 thanks to Yahoo Finance, and the 2.663% U.S. Treasury bond that we found in the previous questions, we're able to plug that into the CAPM formula and find that it gets a 0.08333 or 8.33% cost of equity for AT&T.